Welcome everybody, my name is 𝐏𝐨𝐬𝐬𝐬 and this is the Market Meditations podcast. We chat with fascinating people from around the world to extract mindsets, routines, stories and habits to help you build richer lives. A jack of all trades that's been around since 2014, Crypto OG NotsoFast is here today to talk about trading altcoins and where he thinks the space is going to go in 2021. I think you're really going to enjoy this episode. He's an expert with a lot of experience. Before we jump into this episode, don't forget that I send hand-picked market news, insights, and education to over 6,000 traders and investors 3 times a week. To get access to this, all you have to do is sign up to 𝐉𝐨𝐬𝐬𝐬𝐿.substack.com. Welcome, meditators, to another episode of the Market Meditations podcast. Today we have with us a crypto Twitter OG. NotsoFast, thank you so much for joining us.
Thanks, Karush. It's really great to be here.
It really is great to have you here, and something unique which you bring is the fact that you've been around for a long time. The word OG gets thrown around a lot right now, but I know you've at least been here since 2014, heavily involved in the space. How's that changed since then?
It's hard to sum it up in a quick thing to say, but I think the most interesting change has been the legitimacy of the space now, ever since 2017's big boom, and then the fallout from that, which was prices going up enough across the board for all cryptocurrencies and especially Bitcoin that regulators and institutions wanted to get involved, and suddenly this became so much more than a hobby, and the industry almost sprang up overnight, and now it's serious business with serious business people, career people who've been working sort of tech industry adjacent, realizing that, oh, now there's a new tech industry where I can go and apply my professionalism. And before there was, it was only really hobbyists and degenerates and a few, early founder, pie in the sky, dreamer type people that would be around in the space. So it's suited up, and it's much more professional and serious now. I think it is the main change that I would call it if I had to boil it down.
So it's interesting that you say that, because I'm a prime example of someone who this year has decided to really go 110% into this industry as a career, because before I was a trader, and I don't think a trader is someone who's really that involved in the crypto industry. You're not helping push the space forward. You're not really doing much besides taking advantage of market inefficiencies. But when you start building, when you start providing services, then you're a part of this space. You're building a career in it, and it's still so early, so inefficient, because I don't know what it was back then, but what it is right now compared to other industries, because we're building a team over here right now. And when I bring experts from, say, top level consulting firms, when I bring experts over from different, the property industry, for example, one of our team members is from, they can't believe the amount of inefficiencies and lack of professionalism, not in a negative way, just it's a young, very different industry. So how much more do you think there is to go?
Oh my gosh. Well, like you say, we realize how early we are, even as we progress and hit crazy milestones. Like when large institutions start buying Bitcoin at prices, hundreds of times what I remember buying Bitcoins at when I had some spare cash to throw in, you realize, like, wow, this is just starting. Where can it go from here? Like, will every institution start buying Bitcoin? Will governments start buying it? Will institutions start buying altcoins? Will they start making their own altcoins? Like, what? There are so many directions for this to go, and because there's no permission required for any of this as far as the creation side goes, and it's all fundamentally market interoperable, which means that there's plenty of markets to do that incorporate each of these, and anything that you might create that's a token or a coin or a cryptocurrency is almost immediately tradable by traders and speculators who want to assign an initial value for it, get some initial price discovery for it, and integrate it into everything that way. So there are constantly, I believe, booms going to be coming like that, and there's a cyclicality of those booms that I believe is always going to present, or at least for the long term that I can see, present very heavy cycles of expansion and growth into I guess all pervasiveness. And I don't know where it stops really. It's hard to see that far into the future when we have such massive price and market health contractions and expansions.
Well, there's no reason to think it ever will stop. I mean, take the internet. People forget Uber isn't that new. And Uber was born because of the internet and completely revolutionized an entire industry. And so many more little revolutions like that, or complete infrastructure changes, are going to happen. And now we have cryptocurrency technology that's created blockchain technology that's created a whole new slew of things which should come out. So there's no reason it's ever going to stop. Perhaps the only thing which will stop is the rate at which new innovations come out.
Right. And I think we've seen like a slowdown in the amount of, I guess, attempts at new innovations. When I was first getting involved, it was all in the launching of new blockchains. And that was sort of my edge for a really long time, as I would try and be first to mine everything and get a mining cost that would be so low and so early it wouldn't even show up on a chart. It would be sort of pre-market. That edge is sort of all but completely dried up, and where it's gone now is into sort of token launches ever since 2017. But all of that innovation is sort of self-replicating, and as soon as somebody comes up with a new idea, it gets cloned and tweaked just slightly. So it is a very quick, high occurrence iterative process. And as you and I both know, part of the underlying risk factor in all of these things when you trade them is that something brand new might be just an experiment that might not last very long, because it's the third time a certain new aspect has been cloned and tweaked slightly, and there's not a whole lot of marginal additional value to it.
So you mentioned how you started and your main edge was in mining pretty much any innovative thing which came out. And that was in 2014. That and several other things I'm sure you saw and were doing in 2014 may translate into an edge right now. Do you see yourself as in an advantageous position over someone like, say, me, who's only come in 2017 to really take the space seriously?
It's possible. My bull detector might have a little more experience, but honestly, I found that people looking at the new opportunities with fresh eyes have understood things much better. You know, a lot of the innovation, as I'm sure we're going to get to in a bit, has been going on in the DeFi space. And a lot of what goes on there is kind of very esoteric and complex financial experiments for each new token. Every new sort of token or flowering set of interesting initiatives with interesting rules to the financial game is so much more complex than we're launching the new blockchain. We propose to do this with it. We are going to try to get a community on board. We have funded it via a pre-mine or funded it via nothing. We just hope it catches on. There's magnitudes of complexity higher than that. And that can be a barrier to entry for somebody like me with an old 2014 crypto brain, thinking like, well, what does this coin do? Well, now I have to figure out what a bonding curve is and look at, definitely I'm at a disadvantage if I don't understand the solidity code behind how this bonding curve is coded or what other risks there might be in this contract. Whereas prior, you could often do some pretty quick reviews and make a decision on whether to pull the trigger on a speculation. So I would say that fresh eyes have as much of an advantage to this because you don't know any different. You don't know that it used to be a lot simpler. And I think that's a big advantage. And I would encourage everybody to just jump in and realize, like, if you can get a mental handle on any of this right now and any of the bleeding edge, you're doing better than most.
Well, I'm sure a lot of our listeners will be relieved to hear that, as I am. Even though I wasn't that late, it's still not as early as someone like you. And before we move on to what I think is quite fascinating, everything you've seen since your early entry, I have one more question, which I was really keen to ask. You must have seen huge fortunes being created and lost. Do you have any cool stories to share that you've seen since 2014?
Oh gosh. Okay. Well, I have some good anecdotes, and big numbers are always interesting to hear. So a lot of the fortunes that were made and then kept were from people who idly took advice of somebody much more involved in the space. So, sorry, I'm just getting my head around how exactly to talk about this without revealing anything. But let's say I know another person on crypto Twitter who's been around for a while, and they had a friend that they used to work with long ago who said, okay, well, I want to get involved in this. What do I buy? And the suggestion was, well, if you want something good, buy Dogecoin Dark. Dogecoin Dark was kind of a joke, anonymous clone of Dogecoin that was trading at or below 1 Satoshi on the markets, because before this, we didn't really have big stablecoin based markets. And all it really had going for itself was an involved community due to like a radio show or a podcast that it had. So this person put a few $1,000 Canadian into Dogecoin Dark, which then became Verge and had a pump from about 1 Satoshi to about 2,000 Satoshis. So this person didn't know or recognize that this was happening at all until the friend who originally gave the tip said, hey, sell your Dogecoin Dark. And that person made, I believe, 8 figures off of that small investment and is now riding high and didn't really have to do much of anything. So that's probably the biggest anecdotal story that I know. And because I take it with a grain of salt, because it's 2 steps of hearsay on my part. But if you look back at the charts, they don't lie. Something went 2000x and the person cashed out in Bitcoin. And had they kept some Bitcoin, which I hope they did, they would probably be even more wealthy than that right now.
That is a mind-blowing story, but all too often you hear about that in the crypto space. In fact, 2017 even, that felt like it was happening on a daily basis. I hope that person did manage to keep that fortune and didn't get the gambling bug, which people normally do. And I actually anecdotally have seen a lot of similar experiences where people, you just kind of tell about crypto, hey, you should probably own some crypto. They'll buy, forget about it. And that's probably the best thing you can do rather than try and actively invest and trade for 99% of people.
It really almost is. I mean, trading is, I'm sure you know, is something that people are interested in doing because they can do it from home. They can do it anytime. The schedule's flexible. And there's a glamour to it that if you're successful at it, it makes you feel good. There's definitely a rush. I have a background in trading before I was ever involved in crypto. I was working at a prop desk, and then I got good enough and hot-headed enough and was young enough that I went out on my own and worked from my bedroom basically for 5 years. So I understand the pull of it, and ever more so now. I think it's so much better supported. So I really appreciate what you do for your people in terms of giving them a program and giving them steps to follow and guidance that they otherwise wouldn't have. And definitely I didn't have back when I was doing it. So I really appreciate that. In thinking back to what I would have liked to have, the kind of support I would have had if I'd have had access to your resources back when I was a trader, maybe I wouldn't have taken so many hits as I did,
I really appreciate you saying that. And it's the same, like, it's how I learned. I scoured the internet and I found loads of free resources, and it taught me how to trade. And then I applied that to the markets and it worked out. Again, thank you for the compliments. It really means a lot. It's difficult sometimes though, because while I give them out, on the other hand, as I'm sure you know with all your experience, most people won't succeed at this. And the internet glamorizes it so much with pictures of Lamborghinis and unlimited freedom, because while you do get to work from home, while you do get to choose your own hours, there is a level of obligation you have, in the sense that if you're reliant on that trading income, you can't just not work. You need to stay in the markets. You need to not miss too many opportunities. Otherwise, your data isn't going to mean much if you're just sporadically trading when you feel like it. On top of that, compounded is the fact that whenever you try and express risk management to people and tell them that risk of ruin is a real thing, you can't just consistently target 100xing your portfolio, they'll pivot towards scammers. They'll pivot towards people that tell them, hey, I'll make you a millionaire in a week, because that's what they want to hear, or even a millionaire in a year.
Yeah, there's a lot of searching for shortcuts in new traders, I'm certain. And it's almost, do you leave people alone and let them pay that tuition themselves? Well, sometimes it's going to be too high, because no scammer wants to say, okay, you've paid your tuition to me, that's enough. Like, they want it all. They want the maximum that they can get. And that mindset is definitely preyed on, and it's not a good thing. But the best any of us can do is do what you're doing, and be a beacon of what to do, and kind of tell it to people as straight as possible. Trading is difficult, and there are a lot of meta challenges that aren't really talked about. Like, if you start trading and you start increasing the size of your bankroll and taking on bigger and bigger risks, you can find yourself at a point where, like, oh, well, I have this much of a stack that I built up. Now I can spend money on this, that, and the other. And you increase your lifestyle. And lifestyle creep, I find, is a really, really difficult thing for traders to deal with, because it sneaks up on them. They see a number, but they don't account for, oh, well, now my monthly expenses are this much. When I take this off my trading stack, and then I have a losing streak and a large drawdown, suddenly I can't afford the lifestyle that I got up to and anchored myself at this point. And that can mess up with a trader's psychology and be a self-fulfilling prophecy towards a downward spiral of scaring yourself out of trading, or out of taking size, or losing confidence. And I know this because I definitely went through it. The first time I ever blew out an account. Yeah, go ahead.
I was literally about to say that. These are things which you can't parrot. These are things you don't often read in a book. These are things you experience, you feel, and then you communicate to people. So please do share that example. Would absolutely love to hear.
Absolutely. I've shared it before on another podcast, but it's worth it. For my prop trading career, once I closed that out and was trading my own account from home, I borrowed money from an aunt. And she was a really kind aunt who had some wealth that was left to her by her late husband, and she had always supported her nieces and nephews, and so she supported me in that way, and I was doing really well. And then as she got a lot older, she eventually called in the loan at a time where I was unable to pay it back without losing my entire trading account. I hadn't realized that it was such a long obligation. And so that caused a lot of problems within the family for a long time, because she eventually passed away with me still owing the money for my account to her estate. And it made me the black sheep of the family for a very long time, like multiple years, until, fortunately for me, I was able to earn enough from crypto that I was able to pay back the loan to the family members to whom it had shifted after her passing. So I caused personally a lot of strife within my own family just with this own trading venture. And that was a risk that I was confident I wouldn't ever run into, but I did. And so the main lesson that I can take away from there is if you can avoid borrowing from family, definitely do that. I caused a lot of issues within my own family, and for that, I'm everybody. I've been forgiven. Most of it was because I made it right, but it took a long time for me to be able to do that. And there was throughout the years, there were plenty of questions of whether that idiot would be able to do it at all, you know? So yeah, that's self-sufficiency within trading is really important to keep for as long as you possibly can. And there's always a temptation to take outside investment, especially during a bull market. If you're doing something right and you're posting about it on TradingView or Twitter or whatever, your calls are good, you're making money, you want to show off, you feel good, it boosts your own confidence, and then you start getting people, like you said, that are looking for a shortcut saying, hey, would you like to manage some of my stack? Would you like to do this for me? It can be hard to say no. There are people that don't want to take no for an answer. And I encountered many of them in 2017. They would say, hey, I want to give you money and I want to get on board whatever you mine and then sell later. And I would tell them, like, first of all, my personal trading psychology doesn't account for handling other people's money. This is too risky. What I do is too risky for me to ever want to bring somebody else's funds in on it, because I endured such a terrible time, and I made other people endure that too. So I had some people that would say, like, if you knew who I was, you wouldn't be saying no to me, that type of thing. And just, see those opportunities for what they are, and make sure that if you take it on, you know exactly what you're getting into. And people who I know who do manage others' money say that they take far fewer risks with other people's money, and often those less risky plays compared to their own trading outperform. And that's something in and of itself to look at, because if you're making more money with other people's money than you are with your own, it may be a sign that you should dial back your own trading risk.
That's really interesting, because I hadn't heard that before. In fact, I was going to follow up with a separate point where it becomes similar to governments managing the economic policy of countries, where they have to they have to make the numbers pretty so the people are happy and re-elect them, so they can't take short-term losses or take on short-term debt targeting long-term growth or gains. And I thought with managing other people's money, it would be quite similar. And most people who do that I know who manage other people's money say you probably don't want to if you can succeed on your own.
Absolutely. Well, just with that, you're stuck in annual reporting for taxes. And as we've seen in crypto, sometimes cycles take more than 1 year. So starting a fund, a crypto fund, high on 2017 money, and having 2018 as your first financial year would be pretty ruinous for any fund. And I'm sure there were dozens of funds ruined by that very thing. Whereas if they could have sort of reported their long accumulation phase and not had to be accountable for taxation or for anything, people want results in sooner than a year, and cycles don't always work that way. So it is a challenge managing other people's money that way.
And the funny part is, the people who have enough financial education to know that these things take longer than a year normally don't give other people their money to manage.
100%. They want to see annual results.
Yeah, it's that short-term mentality, instant gratification that we've been trained for so much right now, which on the one hand is really bad. On the other hand, it's probably a reason why traders like yourself are able to profit in the market, because so many people have that other mindset.
It is I guess, an advantage to have. This is what Bitcoiners talk about all the time, and I'm sure you've seen it. Higher time preference, the luxury of higher time preference than a tax year. In another way, it's a way to absorb long-term portfolio drawdowns in markets that are liquid for a while, and then they become illiquid. And then when a new boom comes, they become liquid again. It's something that I constantly say is markets are illiquid till they're not. And liquidity, it by definition, sloshes everywhere when there's more of it. So one thing that I do with that long time preference is if there's a project or cryptocurrency that I believe in for a long time.
So NotsoFast, you've not only been around crypto for a while, but you've got extensive trading experience as well. And I find more and more as a trader, you just mature and start taking on new small habits that make macro changes. And one that I've been taking on right now is a preference to higher timeframes. And there's two primary reasons for this. One, I'm not an advocate for full-time trading. I don't think full-time trading is the best way to go. Being able to trade part-time is an edge if you can pull it off. And then the high time frames, they're just so much less stressful, and also liquidity is so much better. And I do think your hit rate does improve, especially if you pick a market like crypto.
I can agree with that. And I think the mental load and the stress is much lower if you start playing with high time frames, which is it helps it itself, and it helps you to create good habits for yourself. My background was as a scalper, where I didn't leave the trading interface unless I was flat. I wouldn't have an open position. That was sort of the type of size that I would trade during a day, and I would be with the fee structure, sometimes I would be scalping between 1 cent spread between bids and offers on the New York Stock Exchange, for example, and just putting up enough size that it was worthwhile. That's extremely stressful because you're paying so much in fees at crazy volume that you can be making 1 cent profits all day, and then have the market turn against you for whatever reason and lose all of that quote unquote work, because it's not really work when you're just ping ponging like that. So higher time frames definitely work well. And one thing I've noticed in my own trading is that if there isn't a clear macro long-term high time frame trend, I'm generally not trading, because my experience has been so much with just playing tops and bottoms of a range, which can get blown out so easily, especially in crypto markets where everything's quite clear and stops are available to be hunted. And that's how larger players make money from the smaller fish. I prefer trending markets where I've correctly identified a long-term trend, because then there's always a tailwind to all my trades. And currently is a great example. Once we resumed a very clear bull trend, breaking Bitcoin USD above its previous all-time high, I've been only entering long trades. Only, long-term bias is only long. And if I see something that looks good on the low time frame chart, I take a technical entry just based off candles, and I just kind of let it run to where I think it will go. And the only time I took a short, I lost immediately on it, because I realized, like, I wonder if I can just, add, double my trading by doubling the opportunities to go on the short side. And immediately I was, punished for that method of thinking. But I broke my own rule. I went, I find the trend, take trades only within that trend. And this is just something that I do for me, to keep the mental load as low as possible, and only enter high probability things. And going against the high time frame trend reduces the probability of that setup in a big way, or it forces you into lower time frames that you may not want to be always trading, because it increases the mental load and increases the load on your psychology as well, right?
Absolutely. And I could not agree more with everything you've said. I'd love to disagree and create some back and forth here, but really, yeah, hopefully. Literally since 20K broke, I call it money printing mode. In crypto, when you enter price discovery, or when there isn't much recent historic resistance, and you enter what I like to call money printing mode, which is because every trend in this market overextends way more than anything I've seen before. So doing exactly what you said, it's just long until wrong. But the key part then becomes what qualifies as an invalidation of the trend for you.
Oh, it's so many things. It's basically keeping the ratio of win to loss 2 to 1. So with the aiming for at least return on risk of 2 to 1. I also try to recognize where I've been lucky enough to catch bottom, if we're currently talking about this long strategy. And then as long as the trade size is large enough, I try to scale out in the short term. I don't always like to keep trailing stops going unless the position is really, really big, just because there is so much stop hunting in BTC USD. I find it's an easy way to get shut out of a long-term extension, or I basically, once I know I'm in a winner, I like to settle down with that winner and let it run for a really long time. And if possible, take things off once there's a very short-term trend reversal. I try to get out once the move is over rather than as it's going. But it always depends, when you have a move like Dogecoin Dark / /Verge, where it's going 2000x. I didn't capture that entire thing. I was scaling out, luckily for me, at amounts that I considered were unbelievable. But every time I thought, well, this isn't over yet, so I'll take some money off the table and let it keep going. And then I took it all off the table at about 1,300 Satoshi, but it ran to well over 2,000. So I missed a lot of the move where that I could have captured with that. So that was a bit of a misplay, even though it was a great play of my life. Not really completely congruent with current BTC USD trading, because that market is so much more liquid and mature. And for that reason, it supports following your own trading plan and your own trading rules much better than any kind of really speculative asset.
Then to actually leverage BTC USD, because right now I'm sure a lot of our listeners are wondering, we just dipped from 42K to just over 30K. Is that the end of the trend? Would you have taken any profit there? Because I'm sure you own a certain amount of BTC exposure. And as you said, you've been long since the trend broke. Was that a profit-taking situation? If not, how could you tell?
Good question. I've been sort of taking small amounts of profit all the way up, while kind of getting in and out in long-term long scalps. So I did sell a little bit right at 20,000, just as the sort of psychological release, because I'd been holding for so many years, a high exposure to crypto. So part of that was like, if the worst case continues to happen for me and for my own psychology, I'll take some off here just so I can let myself breathe, and then give myself an opportunity to regret selling at 20,000 when we were just entering the thin air territory that you like to say, or that you said is price discovery. And that helps me, selling small amounts all the time while keeping a lot has been sort of my psychological management tool to maintain a high degree of exposure to a market in which I have high confidence. And that's sort of always the way it's been. Most of my net worth is I owe to crypto, and so it's constantly exposed to crypto. And then any other play that I make is sort of increasing exposure to the long side in the very short term and letting it run as far as possible. And I don't really go short unless it's a clear downtrend. And even then, I'm shorting with increasing my crypto exposure in mind for the next run is kind of how I do it. And with all this in mind, I'm first and foremost not generally a trader. When there's a trend, I'll trade. But part of what I learned was if the market isn't working for me, I don't touch it, because it's the best. The upside for peace of mind is unlimited, and the downside is completely minimized for me. Other people may have a better adapted psychology to trading any sort of market, but part of what trading is figuring out what works for you. Minimal cost, minimal risk, maximal upside.
When it's so psychologically based, it has to be personal. Otherwise, it's never going to work long term. Even if it does short term, we're not trying to make money for a year or 2 years. We're trying to make money for the rest of our lives, doing something which I'm sure, just by the way you talk about it, that you thoroughly enjoy. I absolutely love it. In fact, it replaced the video game addiction for me. And I always tell people, if you don't Dude, if you don't like trading, why are you doing this? Go learn to program. You'll make so much more money with so much less risk, and you'll build so many cool, amazing things. A million skills you can do, which are more beneficial than trading. Now, one thing you just said was that you actually have a huge amount of exposure to crypto, which, of course, if you owe most of your wealth to it and you fundamentally believe in the space, which I think at this point most people should at least to some degree, especially with first we had Bitcoin, then we had Ethereum, now we have DeFi. So it's amazing. But before we touch on those exciting topics, let's talk about something which people often overlook. And this is why I reached out to you in the first place. It was right after the Ledger hack. My team told me, hey, NotsoFast knows a lot about crypto security. Bring him on. So on that topic, let's start with the Ledger hack. What are your thoughts on that?
I think it was a real shame and quite egregious and really indicative of the kind of the dynamic of security in InfoSec all over the place, is that the scammers or the thieves or the bad actors are always one slight step ahead of everybody's protective measures. And everyone's really angry at Ledger, and rightfully so. And everybody wants to express that anger in a way where, oh, we want to see Ledger go down. They should never recover from this. But there's another side to that. And the other side is that Ledger is one of the few currently original cryptocurrency security hardware device makers. So if we lose them, even though they've made a massive mistake with their own info management, there will be fewer options for keeping cryptocurrency secure than we had before. And Ledger was one of the originals. We had Ledger and Trezor, and a lot of other cryptocurrency hardware wallet providers have been sort of forked off technology that Ledger and Trezor made. So it would be a difficult, imagine like a house standing up on 4 foundational pillars. That would be taking away one of the pillars. The entire house is much less sturdy. And as far as Ledger's reaction goes, they can never unring the bell of leaking everybody's personal information. And I don't want to recover or retread any ground that you already walked with Jameson Lopp, because he is far more of an in-depth expert on operational security with cryptocurrency than I am, having got into it earlier and having gone through much more difficult trials and tribulations with regards to his being his own bank for so long as he has been. But I've always tried to make it, to distill it down for people who are getting involved early. And it's easy for traders to forget, because often you trade the charts and you don't even need to know what a short name represents or what the underlying technology is and does. And with cryptocurrency, before there was an industry, we all knew that there are extra systemic risks to it. One of those risks is that you are in control of your own private keys. And there are very many attacks against an individual who may be the only barrier between handing over those keys and retaining them. And there's something called a $5 wrench attack, which is, kind of a really scary thing to talk about. It's that nobody needs to break into your ledger or uncover your password or social engineer anything if they have you or someone you care about, which is something that's often overlooked, and a $5 wrench. They can just say, well, we'll hit him with this $5 wrench until he tells us his password. And that one is something that's always going to be a challenge to deal with, because if you yield custodianship of your cryptocurrency assets to a third party, suddenly that main value proposition of cryptocurrency, which is its sovereign money that you hold, is no longer there. So one of the best things that I can suggest, and this kind of can go against a lot of the glamour parts of trading, which are so attractive and self-reinforcing, is that it's good not to talk about size or wealth it's good not to flex. It's good not to talk to people unless they ask you first. And it's good to have some kind of a tool belt of deflections in case people reach out to you. So, this current Bitcoin USD run, I'm sure you and plenty of your people have had others reach out to them saying, "Hey, what's going on with Bitcoin right now?" And there's if you're really excited about what's going on, you kind of want to tell them. And a lot of what people will ask is, "Oh, how rich are you now?" That's how they'll break it. And it's kind of like an icebreaker. They don't expect you to say anything, but if you do say something to them, that's an anecdote that they want to share because Bitcoin's in the news, and they can say, "Oh, my friend got this much," or "My friend's changing his lifestyle this way because they accrued this wealth." And all that is fantastic, but it has to be tempered with a lot of forethought and foresight and being safe. And I think the best thing you can do with that is be very judicious and run your finances like the quietly wealthy. Like, if you get rich off cryptocurrency, the best thing you can do is do it in a way that nobody knows. Don't extend your lifestyle. Don't go crazy. Don't flex. The best thing to do is just make yourself comfortable, make the people around you comfortable quietly, silently. You don't need to tell people. You just need to show people if you feel that you care about, that can sort of keep your secret. And I think, there are types of people that can deal with sort of fame and wealth and outward public flexing and all that. And if you're one of those types of people and you can handle it and you're okay with the risks, and those risks may not exist, but for everybody, you may feel very secure on where you're at and where your family is at and everything like that. But I'm not one of those people. I like to be anonymous or pseudonymous. I don't have an internet presence other than my NotsoFast Twitter handle, which is why I'm able to go on video with you and show my face, is because I don't have an Instagram. I don't have anything else like that. My face isn't out there in any other way, and I keep to myself quite a lot outside of this. So that is not by accident completely. It's about me trying to set a good example of how to keep quiet about what I am and what I do, and minimize those fundamental risks that traders might not consider in the first place.
What you're saying is very accurate. Hiding is always easier, far easier, or not even hiding. Not revealing is so much easier than trying to protect. And that is a great solution for individuals. But for crypto as a whole to move forward, if we want to get to a point where everyone has this option to be their own bank, what's the solution to that? Because at that point, you don't need to hide it. Everyone knows that everyone is, for example, their own bank, and it's not a problem we face right now. So how do we solve that long term?
That's a really interesting question. And I think the people working on it currently are large institutions looking to muscle in on the current growth that we're enjoying and providing bank-like custodial solutions. And if I'm being honest, that will be a solution for some, and it will be a solution for many. But like I said, it's not furthering the goals of sovereignty with one's own money and finances and value. So what I have sort of proposed and I'm looking to flesh out is a methodology whereby, let's say, for example, you're very well experienced in cryptocurrency on your own, and you, I'm sure, have some people close to you that are less, that would like to participate in the upside of cryptocurrency, and perhaps also the sovereignty of cryptocurrency and its savings method, without having to do that. So without having to get as into it as you are. And so for that, I propose small trust circles within family or within groups of people that are highly trusted. And without getting too technical, there are tools available to do this that are getting more user-friendly all the time, such as multi-signature, or the ability to keep cryptocurrency from being spent unless multiple key holders agree that it can be spent. And that's the type of thing that I think should be guided and encouraged with the development of sort of a protocol. Being sort of a family bank or a family office is what you hear for a lot of investment stuff, but any family can be a family office. A family of two can be a family office. And one person is the trusted money manager for all of that stuff, and the cryptocurrency manager. And if all these accounts are protected by multi-sig, then, and this is proliferated throughout society, once cryptocurrency is in everybody's sort of asset class or wheelhouse or wallet or mobile device, however it gets spent at that point or used, that risk of being singled out or targeted goes down a lot. Because if everybody has it and nobody really knows how much every single person has, and everybody's being judicious with their flexing, then it's much harder to pick a target for bad actors. And I think that's my best solution, but obviously there's some work that needs to be done, and there's a lot of responsibility too on the individual who's been first in that and needs to there's a lot of trust that needs to be placed from your family. And if I'm a great guinea pig for that, because I had trust put in me from my family and I betrayed it.
I mean, I can extrapolate a bit on that. It's definitely a solution, but immediately in my head, I'm thinking the slippery slope of, like you said, a family's, it's just a concept that we've created. Eventually, there's going to be disagreements, and then people are going to say, okay, what if we had some external party making sure the agreements are stuck to? And that slowly escalates into exactly what we've come to right now. So there definitely needs to be some sort of major innovation there in order to solve it. And that innovation doesn't actually have to just be crypto. We could just level up our actual security as a society and actually take care of physical security a lot better than we're currently doing. That would be an alternate or collaborative solution as well.
Yeah, I agree with what you're saying. I think collaborative methodologies are what's important, and that is only a start. But if there's a clear protocol for sort of running a family bank, like I had the idea of creating a trust circle charter for one's trust circle bank, and banks run by a charter, and that informs all their decisions. And so if a family member agrees to be involved in the charter, then they run it on their own. But combined with physical security, and combined with governments continuing to allow strong encryption for individuals, no matter what it may be used for good or for ill, which is kind of a fight that's coming right now. And I don't really want to get off onto that tangent, but the right to protect and encrypt one's personal information is very important. And no matter what anyone says with regards to bad actors, we shouldn't give it up lightly, because bad actors will always find a way to break rules.
That's the sacrificing freedom for safety argument, correct?
I believe it is, yeah. And it's a long one, and when it gets complex topics like encryption involved, which the average person doesn't really understand, it can be easy for individuals to give ground on. And that's something that, especially if we are entering into I guess a social world in which we are our own banks and our own family banks, and we rely monetarily on small groups of trust, whereas before we relied on large institutions. We have to become better educated about those things and take them into account.
One idea which just came to mind right now, and I don't know if you're going to be able to expand upon it, or we'll even keep it in this podcast, but a DeFi protocol that allows you to move funds in two ways. And this DeFi protocol allows you to move funds in a emergency way, in which the transaction is reversed after a set amount of time. Just a random idea that came to mind as a potential solution, using certain DeFi protocols to put in security measures.
That would be interesting. So you're saying that like someone's attacking your balance, and you say, okay, fine, I'll give it up to you. And what they don't know is that that transaction will reverse and send the funds back after a specific amount of time. This is pretty interesting, because there are already a few protocols that allow for that. So this will get a little bit technical, but I won't get too far into it. There's Bitcoin's code is full of opcodes, and these are just like little strings that you can add to a transaction that tell it to do something extra. Many of them are placeholders. Some of them aren't even used at all. Some are only used a little bit. But one of them is called check lock time verify. And what it means is you can send a transaction, but you can specify a number of blocks before that transaction actually gets sent through to the mempool. So while you've sent funds into a check lock time verify transaction, the funds are locked for the amount of blocks you specify, and they never get sent because they're already sent. So if you're under attack, you can send a check lock verify transaction for 6 months worth of blocks. And that transaction, those funds can't be respent. And those funds are in limbo until those 6 months pass. Nobody can access them, not even you. And so that's sort of a built-in way that any fork of, like any Bitcoin or fork of Bitcoin, if you know what you're doing, can be sort of put in a safe place where nobody can touch it right away. And it's similar to what you're saying with a DeFi protocol. A DeFi protocol could be used to, instead of send them to somebody and making them think that they have it, it could be sent and saying, oh, well, it's just going to take a while to confirm or anything like that. It's a tricky thing to code, sort of sendbacks or reimbursements, because one of the advantages of cryptocurrency is absolute finality. And transactional finality is important because we have a blockchain that only goes forward, not backward. And the ledger can't really be erased or retripped. So there's a 2-transaction element to it that could be done with certain tokens, I'm sure. But nobody wants to sacrifice the finality of cryptocurrency transactions to protect against attacks like that. Certain tokens, I'm sure, could program it in, but for the most part, most cryptocurrency assets won't have that ability, and that's a feature, not a bug that we can try and work around easily. So I think I hope I've addressed that.
You've addressed it far better than I was expecting. So thank you. That's definitely a very well detailed, thought out, fleshed out answer. This is clearly something you've spent a lot of time thinking about, and rightly so. If you've been holding a large amount of cryptocurrency, you've taken the best measure, which is literally not putting yourself out there, making sure it's not known exactly how well you're doing, being pseudo anonymous. With these sorts of technologies, leveraging the car as an example, the car was invented well before we got seatbelts. So all new technologies, first we get them, then we get the safety measures which follow on from it. Not so fast. This has been a really fantastic podcast, and I feel we can talk for another hour or two. So I would love to get you on the podcast again in a few months' time, because this has been a really educational, enjoyable conversation. I think our listeners are going to absolutely love it. And before we wrap things up, I would like to ask you, is there anything you'd like to leave our listeners with? Any services you have, any platforms you'd like to promote, or just leave them with some great advice, or say, hopefully you enjoyed the episode and would love to come on again?
Well, I definitely would love to come on again. I have nothing to promote at the moment. If you just like to follow me for insights and less insightful things, I'm at NotsoFast on Twitter. And stay safe out there, trade the bull market trend. This is time to print some money for yourself. Don't get greedy, and enjoy the ride.
Thanks for joining us, everyone. Until next time, market meditators. Thank you so much for tuning in to another episode of the Market Meditations podcast. If you enjoyed this episode and you'd like us to continue bringing you fascinating people from across the world, please leave us a review on Apple Podcasts, Spotify, or wherever else you like to listen to these podcasts, and share the episode with a friend. If you have feedback or an idea for a potential guest, reach out to me on Twitter at @𝐉𝐨𝐬𝐧, and do not forget we write a newsletter covering all important topics in crypto and traditional markets. We send it out 3 times a week. The Market Meditations newsletter. You also get early access to these episodes, and you get transcripts and extra notes as well, so make sure to subscribe there as well.